Hello everyone, so something I would like to add before the video starts. This is a really good video that contains a really good amount of value on how I trade and the strategy that I use on a daily basis to get profits in the market. And this is something that videos like this, but as an example, the video of today is somewhere around 10 minutes. And videos like this is what my students get in a daily basis of around 20 minutes explaining today's price action, explaining the day's price action. So going into detail, going through the steps you should have followed and how you could have managed to catch these profits, right? So I just wanted to mention that the Academy currently is a really low price. I've received messages of it being very undervalued, and yeah, just wanted to add that small thing here. Hope you enjoyed the video, and yeah, just jump right into it. Hello everyone and good afternoon. Today is December 31st, right? Yes, December 31st, and I'm going to be going over today's trade, the trade that I took in today's price action, although there's really not much to go through, as really the only trade that worked out based on the strategy that I use and the way that I trade was basically the one that I took, and I don't really think anything else formed after that, but we'll make sure of that later. So the trade that I took, the reasons why I took it, and how you could have gotten it. So the first thing that I do each morning is analyze a 15-minute time frame, and what I saw is that price was currently within this extreme, right, which is the mitigation to basically this other extreme. Took liquidity from here, right, and this extreme, what caused was this huge move that took this low. So in a way, you could think of this two ways. This is either a lower low, to then a lower high, to then the lower low, right? So this could have been a good long-term sell if we would have been looking for the lower low, right? Or you see it as a sweep, which in this case I think it was kind of clear, the sweep, due to the nature of the move, right? It strongly comes back down, takes the equal lows, reacts to an area of demand, and then strongly comes back up, right? And as you can see, on the way down, it does it kind of it doesn't really strongly push down, right? It doesn't impulsively get to the downside, but it does it correctively. It's like somewhat of an impulse correction impulse type of scenario, right? So just based on that, you're not really expecting sells, but you're looking for buys, which in this case no buys actually worked out or appeared based on my strategy or the way that I trade. But as an example, there was a buy based on this 15-minute PY, right? So what do I see? Price in that looking really well, and what I do is go into lower time frames, my execution time frame, and what I see is the next. Price taps the PY. Usually the first tap into a point of interest, into an area, into supply, into demand is taken as liquidity, which was this case. And the only problem that I had with this trade is the liquidity that it created after, right? So liquidity and manipulation both, as price gets here, takes the liquidity and strongly pushes down, right, inducing people to place entries around this level, and well, with their stop losses above, which that's what creates liquidity, and then price again gets back into the same exact level and strongly reacts again. That's just pure liquidity being created and manipulation as well. Now some liquidity was taken, as maybe people was trying to sell from here. Sometimes the brokers hire the spreads in areas like this, so someone with their stop loss around here could have entered it out. So a lot of liquidity was taken, but a lot of liquidity was created as well, because a lot of interest would have been placed somewhere around these levels with their stop losses just above, right? So it was not really good to see, but it is what it is. It is what we had. So we had to make the best that we could with that situation. So what happens is that after price sweep this high, strongly pushes down, and we have a change of characters, right? So price was creating higher highs, high lows, now changed to lower lows and lower highs. So just based on that, what I expect price to do is, as it has created a lower low, and based on the simple concept of order flow, is for price to go up, create a lower high, and then create a lower low, which is exactly what happened. And what do I expect price to do next? To do the exact same thing. Lower high, lower low. Right, just based ourselves on order flow, we could easily expect what price could do. Now the hard part per se is basically taking the entry or identifying where the entry could occur, right? So in this case for me it was simple. I woke up, well, I started watching the charts around, with the symbols, so somewhere around these candles, right, before it starts to retrace. And what I realized is that this is a 5 and order block that caused a major break, that could have been considered as an entry already. As it was the holidays and I wasn't entirely sure if the market was working at 100%, I wasn't really convinced on taking this risk entry. So what I ended up seeing is this. What I see here is that price gets to a level, fails to get higher, and impulsively pushes down. Right? What do I see here? A little bit of manipulation, a little bit of liquidity, but what happens later? Price gets up to this level. We see a huge week. We see a reaction. We see price still respecting the area, and then a small move to the upside to take this liquidity. That was good enough for me to consider that this swept liquidity, and look at this strong move that it made later. So one of the type of setups that I like trading is when price takes liquidity from one side and then takes liquidity from the other, right? So I had my liquidity here, so had both of those liquidities, so I can already trade this. I took this trade with the demo, right, with the paper trading account, which I risked a 2% because I really like the trade, but that's not something that I would have done in a normal scenario, right? You see there a 21% profit as it was somewhere around a 10R, because I did this. I don't really remember. Well, the target is the same. I don't really remember what I went for a stop loss. Basically got 10R approximately. And the thing is that I had already both of those things, right? But for me to take that trade in a challenge account, something that I tend to be much more conservative on, I wanted to see something else. So on this move up, I didn't see price creating much liquidity. I did like this, but that was kind of created for this, which failed completely. And price just continued to push higher and never really created liquidity. Created liquidity here, right? But on this move up, on the way up, it didn't create liquidity, so I wasn't really convinced about the trade. What happens then is the exact same structure that we see here repeats itself here. That was just lovely to watch it happen. So the first thing that I see is price getting to a POI, causing quite a strong reaction. I really liked that. The only problem that I had is that the area to break for me to be able to place an entry would have been this, or well this if I wanted to be more conservative. So I didn't really like that. I did like to think of this as maybe liquidity due to it being the only area on this push up that price basically retraced strongly. And when price got up here and started to basically range in here, and then the exact same move that happened here happened back here happened now, that was just a beautiful thing to see, right? Then price causes a shock, and I went for the entry on the open. Didn't want to miss out on the trade. I thought that the impulse was going to be really strong, so I was not expecting a big retracement, but it did do a big retracement, and as you can see, price basically created equal highs in here. That then took exactly like it did here and exactly like it did there, right? It was beautiful trade. So place the alert here, place the alert on the stop loss as well, and said, I'm forgetting about this trade. If it goes well, then great. If it doesn't, well, it is what it is. Price, I got an alert somewhere around here that price was making beautiful moves, and then when it was around here, 2%, I was really happy. I was not even planning on trading today, but got up and saw the price action was working out quite well. And honestly, getting a 2% profit was really good for today. I ended up the week on around 6% gain, took a 3% profit on Tuesday, a 3% on Thursday, right? Yes, yesterday, and 2% today. So that's great, beautiful. Oh well, and a couple of losses, of course. Otherwise, I would have gone an 8%. Just a lovely trade. Could have gone, and I even thought about going for the 50%, which would have been, well, at this point, it would have been 7.67R, which would have been a 3.8% profit. And if I would have allowed it to run where it should have allowed it to run, that would have been 14R, which means 7% profit. It made in just one morning, and in just one trade. That took 40 minutes, right? The way that I traded it was like this, which could have gotten somewhere around a 4%, 3.9, something like that. But I'm really happy, as I said, with this. So yeah, really good trade. After that, I did like this. swept a lot of liquidity, so created liquidity before actually taking all of that liquidity to the left. Then you see a chalk, and I went for this on the demo, but on the challenge, of course, I was not going to continue to trade today. But I never really got confluences to take this trade on the demo, on the challenge, sorry. And then this one, which is price getting to a POI, didn't take that much liquidity except for this move up that took these highs, right? That was the only liquidity taken, and well, the liquidity taken in the middle. A student of mine actually took this trade, which was a really good trade, really good risk entry, targeting this low, and the target was on point as well. So that was a really good trade, and I was just waiting for the CE. I didn't like the fact that it didn't break the low. I did like this liquidity though, so I went for it on the demo, but well, didn't work out, and it is what it is. So that is pretty much about this video. I don't really want to go into much details. I think it's pretty much explainable: liquidity, confirmation entry, and important areas of supply and demand. It's really not much more than that. Of course, there are tons of concepts used in this: order flow, expectancy order flow, liquidity, manipulation, sponsor candles, sweeps of liquidity. It's just a lot of things included here, which I've tried to basically explain in a couple of minutes. And that is pretty much it. I hope you enjoyed, hope you take something away from it, and I'll be seeing you on to the next one.